Okay, I'm going to go through some of the basic stuff that I found in Baby Pips on babypips.com that helped me when I first started trying to learn how to trade. So for this video and for future videos, I would really say get like at least a pen and a piece of paper because I'm not going to read everything word for word, but I'm going to go through some stuff that you're really going to use in your forex trading like pretty much daily. It's some things that you're going to really need to know in order to be a successful forex trader. So basically, what is forex? You know, a lot of people either haven't heard of forex or they have heard of forex and they think forex is basically stocks. When forex is not stocks, forex is forex. So forex is trading out one currency for another currency, which means that you can say that you believe the value of $1 is going to go up or down, or the value of like the Japanese yen is going to go up or down. So we're going to go through all of that. Baby Pips kind of break all of that down into bits and pieces. So what Baby Pips say is if you've ever traveled to another country, you usually had to find a currency exchange booth at the airport. Then exchange the money you have in your wallet into the currency of the country you are visiting. So let's just say you're leaving from the U.S. and you're going to Japan. Once you get to Japan, you're going to need to purchase Japanese yen. You're going to need to exchange out your U.S. dollars for Japanese yen. And so that's basically what you're doing. But Forex make it possible for you to do that without going to Japan. You can and profit from it, you know, because the value of this stuff goes up and down. So it's a lot of profit in it. And I'm going to show you more about that later. Okay. Moving on. You know, once you okay, like let's just say you go to Japan. Once you're over there, you've done it all your visiting vacation. Once you come back home, you're going to have to change that Japanese yen out for U.S. dollars, so that when you get back home, you're going to be able to spend it. But once again, forex make it possible for a person to do that without leaving their house, or you know, you can do this pretty much from your cell phone. Okay, so that's that. The Forex exchange market, which is also known as Forex or FX, is the largest financial market in the world. Compared to the measly $22.4 billion per day volume of the New York Stock Exchange, the foreign exchange market looks absolutely something with its $5 trillion a day volume. Yep, and like I said, that's trillion with a T, capital T, I think. Let's take a moment to put this in perspective using monsters. Okay, so it's a chart on here that make it that you know that pretty much right here we go. Forex, $5 trillion a day. Look at what the New York Stock Exchange, you know, trading value compared to Forex trading value. So that big difference is what made it so important to me to learn this and you know see what was the big hype about it, see you know how was people profiting from forex compared to how was people profiting from stocks, because I know people profit from stocks, but when I first heard of forex I had never heard of it before, so I just had no clue what was the point of it, but now I see. Okay, moving on, the Forex market is open 24 hours a day, 5 days per week. The Forex market closed on Friday. It's 4 o'clock. I'm in Central Time, 4 o'clock Central Time, and it opens back up Sunday, 4 p.m. 4 p.m. Closed Friday, 4 p.m. Open back Sunday, 4 p.m. for me in my time zone. All right. What is traded in Forex? The simple answer for that is money. Forex is trading one country money out for another country money. And you know, they also call it currency. So currency is money, basically. All right, so I'm gonna go back right here. In forex trading, when you buy, say the Japanese yen, you are basically buying a share in the Japanese economy. You are betting that the Japanese economy is doing well and will even get better as time goes. Once you sell those shares back to the market, hopefully you will end up with a profit. So let's say you came in with the Japanese yen and you held that trade for a few days or a few weeks, few hours. When you get ready to close that trade out, you're going to hope that you've held that trade long enough are the for you to profit from that, and it can all, and it's not going to always, it's not a win-win situation with Forex. That's why it's so important to learn what is Forex, because it's never going to be just a 100% win every trade type of deal. But the more you know about it, the better off you'll be, the less trades that you will lose out on. Your major currencies. While there are potentially lots of currencies you can trade, as a new trader, you will probably start trading with the major currencies. And I've never tried to trade anything other than the major currencies. I mean, once I realized the spreads on some of those other currencies, I never even looked at them. So the ones that the ones that I trade, and the ones that mostly everybody that trade forex trade, is the Canadian dollar, the United States dollar, Great Britain pound, European euro, Swiss franc, Australian dollar, Japanese yen, and your New Zealand dollar. Okay? So currencies always have three letters, where the first two letters identify the name of the country, and the third letter identifies the name of the country's currency. Okay, so right here we have NZD. So the first two letters is New Zealand, the third letter is dollar. So you get that right. NZ stands for New Zealand, while D stands for dollar. The currencies included in the chart above are called the majors because they are the most widely traded ones. All right. We'd also like to let you know that buck isn't the only nickname for US dollar. Like, they have more, and there's a small list right here of everything else that the US dollar is called. So that's that. Moving on, buying and selling currency pairs. We already know that when you buy and sell a currency pair, you're buying and selling money. Okay? Moving on. When you trade in the Forex market, you buy or sell in currency pairs. Imagine that each currency pair constantly in a tug of war with each currency on its own side of the rope. Exchange rates fluctuate based on which currency is stronger at the moment. So then you have your major currencies, and you also have your major currency pairs. The currency pairs listed below are considered major. So then you have your majors: your euro dollar, your dollar yen, your pound dollar, dollar Swissy, dollar loonie, Aussie dollar, and your Kiwi dollar. Okay, so basically you have your Eurozone, your Euro USD dollar, your United States Japanese yen, United Kingdom, United States. So that's that list. So other than that, you have your crosses. Currency pairs that don't contain the US dollar are known as cross currency pairs, or simply as the crosses. So currency pairs are minor currency pairs, are pairs that do not contain the US dollar. Okay? Major crosses are also known as minors. You have your euro crosses, yen crosses, pound crosses, and you have other crosses. Like, this is stuff that you're not going to really just learn in one video. I'm just kind of going through this so you can know, like, the parts that you really need to pay close attention to. You're going to really need to know your currency pairs, your majors. That stuff you're going to use every day. Moving forward. GT currencies. The GT currencies are 10 of the most heavily traded currencies in the world, which are also 10 of the world's most liquid currencies. Okay, traders regularly buy and sell them in an open market with minimum impact on their own international exchange rates. And that's that list right here. Here we go. These are mostly like exotics. I skipped all kind of through that because I don't really trade the exotics. Emerging national economies. So the spreads on those is kind of ridiculous, and I don't understand them. So I don't do it. Forex market size and liquidity. Unlike other forex markets like the New York Stock Exchange or London Stock Exchange, the forex market has neither a physical location nor a central exchange, which means that you cannot go anywhere and walk through the doors of a Forex market building like there is now. So the Forex market is considered an over-the-counter or OTC or interbank market due to the fact that the entire market is run electronically within a network of banks continuously over a 24-hour period. So even though the Forex is trading out 24 hours, 24/7, the market isn't open 24/7. The market is open 24/5. It's open 24 hours for 5 days. This means that the spot Forex market is spread all over the globe with no central location. Trades can take place anywhere as long as you have an internet connection, which means that you can do it from wherever you're at. Like if you're on vacation, if you visiting, if you're bored, wherever you're at, you can do this from your phone. I mean, it's better to, in the beginning especially, it's better to do it from a laptop. That way you can kind of play around with the charts. But as time go on, it make it a little easy. It's a little easier to understand how this stuff works and how you can do it from your phone with no problem. So the US dollar, as you can tell, is the most traded currency, taking up 84.9% of all transactions. The euro share is second at 39.1%, while that of the yen is third at 19%. As you can see, most of the major currencies are holding the top spots on this list. The dollar is the king in the Forex market, which it really is, because as you can tell, those numbers show you that, the US dollar is the highest traded, it's most heavily traded. If the US dollar is one half of every major currency pair and the majors compress 75% of all trades, then it's a must to pay attention to the US dollar. Okay, a must. As time go on, you will see why is it so important to keep up, to be able to read charts. It was easiest for me to learn using a euro US dollar chart, to be honest with you. It didn't move all crazy, it really didn't. All right. In fact, according to the International Monetary Fund, the US dollar comprises roughly 64% of the world's official foreign exchange reserves, because almost every investor, business, and central bank own it. They pay attention to the US dollar. All right. There are also other significant reasons why the US dollar plays a central role in the Forex market, because, the United States is the largest economy in the world. The U.S. dollar is the reserve currency of the world. The United States has the largest, most liquid financial markets in the world. And I mean, the list kind of goes, and there's a couple more of why you should pay close attention to the U.S. dollar. Speculation in the Forex market. One important thing to know about the Forex market is that while commercial and financial transactions are part of the trading value, most currency trading is based on speculation. Okay. In other words, most of the trading volume comes from traders that buy and sell based on intraday price movements. All right. I trade based on moving averages, price movements. I use a couple of different things to help me enter and exit trades. All right. The trading volume bought about by speculators is estimated to be more than 90%. So, I mean, it just keeps, keeps getting more and more interesting. The scale of the Forex market means that liquidity means the amount of buying and selling volume happening at any given time is extremely high. Okay. Liquidity means the amount of buying and selling volume happening at any given time. So liquidity can be high, low, or low. No, high or low. This makes it very easy for anyone to buy and sell currencies, because basically the market is only going to do one or two things. It's either going to go up or it's going to go down. It may stay in the middle part, midway somewhere, but it's going to go up or down. You're buying if it's going up, you're selling if it's going down. So that's basically what it's doing. From the perspective of a trader, liquidity is very important because it determines how easily price can change over a given time period. And that sentence says a mouthful. You will hear people say they trade the London session, the New York session, sessions like that. I mostly trade the London session because it is the most liquid time of the day to trade. It has the highest liquidity during the London session, and we'll go over more of that later. All right, let's see here. Different ways to trade Forex, because Forex is so awesome. Traders came up with a number of different ways to to invest or speculate in currencies. Among these, the most popular ones are spot Forex, currency futures, currency options, and currency exchange traded funds, or EFTs. So I'm not going to go all the way into detail of what those are, because this is certain things that you will really need to sit down and try to learn it for yourself, and this is one of them. I mean, it's not the most, it wouldn't be the end of the world if you didn't know exactly what each one of these mean, but it is important to know what you're trading. So that's all I have for the preschool what is Forex portion of Baby Pips on babypips.com. It's the first lesson that you are going to come across before you get ready to take the first quiz. And the quizzes, they help you out a lot too, because it basically makes sure that you understand everything that you just read. So thanks for watching. Have happy trading.